Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hope all of you had a very nice weekend so far, and welcome back to the channel. So keep in mind, all of these options plays are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that we like to run on the channel. It is the backbone of my trading portfolio that I started just last year for the YouTube channel as a whole. As of currently right now, we're up about 70% on the year to date performance, which is a very good year. And it is not luck, guys. This strategy actually works. Here is me last year at the end of the year, and you can see the end of year performance from myself last year was roughly the same, about 75%. So we are up roughly 2.5x what the S&P and the QQQs are doing 2 years in a row, running mostly the wheel strategy for a large portion of my portfolio. So in today's video, guys, we're going to take care of a few things together. Number one, we're going to be setting the tone for the week. What can we possibly expect in terms of technical analysis? Are we going to see a pullback in the markets? And what can possibly cause that pullback? So looking into economic macro data events that are coming out this week as well. Once we get through that, we're going to take a look at a few of the strategy rules that I like to look for when I'm looking to sell put options on my favorite stocks to generate that very juicy premium. Thereafter, of course, we're going to get into the top 5 options plays of the week. And to conclude, I will give you guys some bonus plays as well, as per usual. So let's get right into it, guys. It should be a very fun video nonetheless. So in terms of the expectation for the week, guys, well, we know that if you guys have been watching my daily Monday to Friday market recaps, we've been saying that the bulls are getting a little bit tired here at the top, and we could be in the process of setting up a daily downtrend into further weekly consolidation on the SPY. It's been 3 weeks of gorgeous rally before this last week, but now there's a few cracks forming in the bull's armor. More specifically, the lack of market rotation right now. Here is the 1 week relative performance from last week. You can see it's a very top heavy market concentrated into only a few names. Reminds me of when we were in March, April, and May when the market was doing the same thing. We need more broad market performance right now, and we are just not getting it. This is a stark contrast in relation to roughly a month and a half ago when we did have a very broad market in terms of performance. Take a look at the 1 month relative now. You can see just how top heavy the market is. Only a few names carrying the indexes, and this cannot last forever, guys. So be very cautious leading into this week. I'll give you guys a little bit of a hint, right? December is usually the period where people either do the best or the absolute worst, chasing gains into the end of the year. Do not do it, guys. Still run the same strategy. Do not get greedy trying to juice up the ROI for your portfolio to wrap up the end of the year. Be patient. Let stocks come to you. Do not start chasing the top, especially not in this week when we have a thinning out of the market. In terms of sector performance, the rotation is not very good. Take a look here. Your percentage of stocks above the 50-day moving average. We are curling to the downside, leading into possible more sell-off territory before finding some support from the bulls. 200-day moving average as well. Percentage of stocks above this one, it is now at 60, also curling to the downside. So when you have the percentage of stocks above their 50-day curling to the downside, percentage of stocks above their 200-day curling to the downside, and you know that the market has not been that broad over the last week and a half of trading, it is not the time to go all in and start chasing some of these names after they've rallied 10, 15, 20% in the last 2 weeks. May just be a catalyst for an overall pullback. Keep in mind as well, for the catalysts for the pullback, there are many and they are not very far between every single day. Monday, we get the manufacturing report. I will remind you, there is a lot of focus on manufacturing because it measures economic output. This is possibly one of the recession catalysts that people are looking at. If these manufacturing reports come in too weak, you guys know what happens. We've seen it before, right? Go back to August and you will see exactly what happens in the markets when we get a weaker than expected manufacturing report. This is exactly what started off the sell-off in the month of August. So pay special attention to the manufacturing report tomorrow, because if it does not come in good, the markets will continue on their decline, which they've started this past week. Then Tuesday, retail sales, another focus into the consumer. If this one comes in weaker than expected, you guys know the drill. Market's going to come down. Wednesday is an absolutely huge day. We get the FOMC interest rate decision. Now, I'll remind you, the expectation is indeed for a 0.25% cut. The probability is right now standing at 96%. So for the most part, the Fed Fed is going to drop the interest rates, but the focus is not going to be on the interest rates. It is going to be on the summary of economic projections. Once every 3 months, the Federal Reserve gives its projections for the direction of interest rates over the next 1, 2, 3 years and the long term. If these expectations come in higher, that means rates are going to stay higher for longer, and the market is not going to like that, guys. So this is going to be all about that summary of economic projections. Pay special attention to this. On the Thursday session, we get the finalized number for GDP for Q3. That is supposed to come in largely the same. This is the final estimate. Usually when we get Q3 GDP, you get it 3 months in a row. The first number, then revised and revised. This is the last revision for that data set. It should come in okay, but pay special attention. And then on Friday, we get an inflation report, the Fed's preferred inflation gauge in the PCE results for inflation. So all throughout the week, guys, you have a number of different catalysts that can possibly derail the market. Why? Because we still have a bear market thesis in play. I did a video on this about 2 weeks ago. There is not a lack of catalysts for a bear market, or at least a deep pullback. If any one of these catalysts comes alive over the course of this week, the market is going to feel a little bit of pain. And as a matter of fact, you can tell from the technical analysis, right? Nobody would be surprised if the bulls go on a daily downtrend here and start a weekly pullback. It would look very natural for a 1 to 2 week pullback before resumption of the uptrend on the SPY. And the same thing for the QQQs. It would look very natural to have a 1 2 week of pullback. So we're getting a ton of data right before the Christmas session here. And I would not be surprised if any one of these results are negative, that we do embark on weekly consolidation. So what I'm saying is, do not chase the market. And when we go through these individual names, I will show you that a lot of names have rallied an absolute ton, and it would be very logical if they take this week, if there's any negative data in the market, they can take the week to just consolidate and consolidate. And the last thing that you want leading into a week of consolidation where you can see the SPY and the QQQs down 2, 3 possible more percentage points, the last thing you want to do is get greedy and get trapped at the top and then go into a week and a half, 2 weeks of consolidation. And it's just not fun. So be careful, be patient, and do not be too greedy this week. That is what I have to say in terms of the projections for the week. Now, in terms of these strategy rules, what do I look for when looking to sell puts? So the rules of the put wheel. Number 1, we want to be building a watch list and filtering for red. Every morning when I look at the markets, I have this watch list and I filter it by red because I'm only looking for companies that are down on the day. Why? Because we're looking to sell puts, guys. Selling puts is very easy strategy, whether you're a beginner, intermediate, or even advanced investor, provides great income provided that you respect the strategy rules. You too could have gains in the 70+% range per year, provided that you play this strategy in a conservative and in a very disciplined manner. So what you want to do first is we want to build a watch list and filter for red, because we're going to be looking for the companies that are down the most so we can write put options even further below. Every single one of these rules, guys, is going to minimize the probabilities of being assigned those shares. Think of selling puts, guys, as a buy limit order that pays you. If I want to buy 100 shares of NVIDIA stock, right? There's 2 ways I can do it. I can either set a buy limit order, let's say here at the support at 130, but if it doesn't get hit and the market just rallies, then I don't end up with any shares and I don't make any money. That is where selling puts comes in, guys. You can write puts on NVIDIA down here for roughly, let's say, for the week coming up, if I wanted to buy 100 shares of NVIDIA, I can go down here around the 128 mark, sell a put for 128 and collect $91 in total premium, reducing my average cost per share by 91 cents. So it's like a buy limit order that pays you. You want to buy the shares, and this is the key. You want to buy the shares if it does come down into your level, but if it does not come down into your level, you just keep all of those $91. And if it does assign you, you still get to keep the $91. It's a very easy way to reduce average costs while getting into a position. But if it doesn't get hit, it's a very easy way to just collect that premium, put it in your pocket, and go find another trade. So that being said, guys, here are the strategy rules. I'm going to fly through them right now because if you have not seen my 30-minute video and how I go into detail about this strategy, I'll leave it down below in the description, 35-minute video, and I go through all of these rules much more in detail than I'm about to do right now. So rule number 1, guys, has to be a solid company. Why? Because there's always a risk of being assigned. If you do not want to own the shares at the strike price that you are writing, do not write that option. It's very, very simple, but but a lot of people get this one wrong. I'd say only solid companies and only high conviction companies for you, because if you get assigned and your position starts getting at a loss, well, you're going to have to open your brokerage account on your phone every single day and ask yourself what you are actually doing in that position. So please keep these to only solid companies for you. Number two, we want to be in stocks that are in a monthly uptrend or a long-term range. A monthly uptrend kind of looks like something like the SPY, right? You want to know that the longer-term bulls are at your backs. That way, if we're in a pullback and we choose to write some puts down here, you know that the likely outcome is going to be some support before a further rally. So you want to put all the odds on your side. So monthly uptrends or long-term ranges. A long-term range can be something like an Autodesk where it ranges down here for like a year and a half. Usually writing puts at large support levels is a very profitable endeavor. That is rule number two. Rule number three, no earnings this week, guys, at all. Earnings can be a very volatile event. And if you want me to pull up my own performance, you can see the dips above me right there. These big dips that we've had over the course of the summer, right? Those are all earnings plays gone wrong. Yes, myself, I do choose to play earnings sometimes in a very conservative manner, but sometimes, guys, it's just not enough. When you end up with situations like a Salesforce where it just blasts down, they have their worst day in 15 years, it's not going to be fun if you're writing puts on those. Nike, you definitely don't want to get caught in a 20% down move on Nike. Starbucks, the same thing. You definitely don't want to get caught on a 20% down move writing puts before earnings here, and then the stock just gaps down 10-15%. So if you want to be safe, guys, in my humble experience, even though you see me do it, I do not recommend anybody play earnings because it sometimes can be very tough to recover from, especially if you're not able to manage the losses quickly and efficiently. So no, the stock needs to not have any earnings this week. Number four, we want to be writing puts on stocks rather, in an area of support or an area of breakout retest. I bring up Autodesk every single time because both of those trades are clearly visible. So an area of support, guys, is quite simple. It's a longer duration area of support, 3, 4, 5 months type of thing. Writing here, usually a very decent probability of not being assigned. The breakout retest is somewhat known as the trend continuation trade. Weekly uptrend, we smash through the upside of this resistance range up here, and then we retest the range as support. This retest area is usually a very solid probability trade for upside continuation. So every single one of the trades that you'll ever see me do on the channel in this top 5 list is going to respect one of these two criteria. It's in a support level or it's a breakout retest trade. Now, number 5, you want to be writing at or lower than the expected move. If you guys do not know what the expected move for a stock is in a given week, let me show you what that means. So the expected move for a stock, guys, quite simply is the probabilities that Wall Street attributes to how much up and how much down a stock can go in a given week. Here you can see on the screen right above me to the left right there, the expected move for Nvidia this week is 129.04. So to add all the odds in my favor of not being assigned, we want to be writing strike prices on these below the expected move. It allows us that if the stock dips really, really hard into the expected move or goes below it, usually you have a little bit of mean reversion midway through the week, which kind of makes the stock curl back up into the expected move. So you want to put all the odds in your favor. And if you don't know what the expected move of a stock is in a given week, you can come to this website right here, bar chart. Just type into Google, bar chart, Nvidia expected move, and you're going to come right on this same page. It's free. Don't need an account or nothing like that. So that is pretty much for this one right there. And then we want to be writing on a red or flat day. Notice I say build a watch list and filter for red. Well, obviously, guys, if we're trying to write strike prices under the expected move, well, it stands to argue that you want to have a red day so that it comes down into the expected move, so you can write strike prices even lower than that, right? So these 2 points are very important. It once again puts a lot of odds in our favor of not being assigned. Now, the next one right here is very important as well. This is going to be your take-home pay. This is your weekly ROI. We want to be targeting between 0.5% and 0.75% in terms of weekly premium. What does that mean, guys? Well, a lot of people like to write puts with delta. The problem that focusing on with delta too much is that depending on the implied volatility of the stock, 20 delta is going to be a different price variance. Nvidia, 20 delta could be $10 away, but on a stock like Coca-Cola, a 20 delta can only be 50 cents away, $1 away, 1% away only, right? So to keep things on a common denominator, I instead like to use the 0.5% rule. What does it mean? Well, very simply, guys, you're going to be looking for 0.5% of the strike price, meaning what you want to look for here is you want to have half of the strike price in cent increments. So half of 126 is roughly 63. If you see 63 cents on the bid, the trade should be good. It is paying us a decent ROI. 0.5% every single week on capital employed is roughly 26% per year. No compounding and no covered calls either. That is your baseline, and that is roughly 2.5 times the average move on the S&P per year. So once again, guys, it's very simple, right? If we want the 126s, just do the math. 62 divided by 126, you will see that that is literally 0.5%. It's a very easy mental math way to go through a ton of options chains and know exactly where you should be looking at in terms of premium, right? So just use that rule. It's called the 0.5% rule, and it's the same across all stocks. You can go through a ton of options chains really, really quickly. The one thing, guys, I do not advise going any higher than this, because when you go higher than that, you're too close to the current share price. I know the premium here looks very, very, very juicy, but keep in mind you have a high risk of assignment. So the 0.5% rule, is a sweet spot. In my experience, it's, the area in which provides you very decent ROI, but a somewhat low risk of being assigned. And of course, if you go too low, well, there's just no premium there. You're not getting compensated enough for your capital. So keep that rule in mind. And lastly, we want to set a take profit order at 90% of the contract value. This just means if we write an option on a Monday morning and by Tuesday afternoon, the thing is pretty much 90% profitable, we want to close that trade and go shopping for a new trade. It serves me no purpose, guys, if on Tuesday afternoon a stock is the contract is 90% profitable, to hold it into the Friday session. You may as well just take the capital back and go look for another play. And then lastly, if we are assigned in the event the stock closes below our strike price and we end up having to buy the shares, what do we do thereafter? Well, we're going to be writing covered calls. The put wheel, the writing puts, is to get into a stock below the market. It is a buy limit order under the market. Now, covered calls is how we get out of the trade. It is a sell limit order above the market. So same rules apply. When we're looking for covered calls, we're going to be looking for 0.5% to 1% in weekly premium, and we want to be writing at the assigned strike price or one strike higher. The only time you will ever see me write one strike price higher than my assigned price is, let's say I get assigned Nvidia down here at 130 by this Friday, and then the following week the stock just gaps up. Then I will probably write 1 or 2 strike prices higher just to get a little bit more of that share appreciation. But I would say, guys, in 95% of cases that I get assigned, I'm always writing at my assigned strike price just to keep things very simple. So those are all of the strategy rules. Hopefully you guys enjoyed those. Now let's jump into the top 5 options plays, shall we? And play number 1 is going to be Uber. So I just want to say, for all of you guys that are using the timestamps and you skipped over the rules, these are for selling put options, not buying put options. I'm not trying to make a play on the downside of stocks. I'm looking to buy these stocks if I get assigned under the current price. And if not, I'm just looking to collect some premium. So these are not long put plays, guys. These are selling put plays. We are writing options here. So moving into Uber right now. Uber is stock number 1 for a reason. It has been coming down very, very heavily right now. And the stock currently is down about 31% from the all-time highs reached earlier this year. Why? Well, it's been just plagued by a few bad news elements. Number 1 has to be the news that Waymo was entering the city of Miami. Just last week, they came out with that news. But when are they entering Miami? Only in 2026 with a very small portion of a fleet. So that news affected Uber to the downside. Of course, we have the Tesla robotaxi news that's working against Uber as well. But keep in mind, Elon has said himself, the scale for the robotaxis will only be met really in 2026. Then as well, there was the news last week of GM canceling their Cruise autonomous vehicle project, and Uber was supposed to be the recipient of not a few, but a lot of vehicles for their own fleet, because Uber does want to embark in a autonomous vehicle fleet as well, but they're also a very wide network too. I will remind you guys, what is the benefit of Uber, right? Uber has so many different partnerships across the world. They're in over 70 countries and 10,000 cities. And somehow this stock is down almost 20% because Waymo, who they're already partnered with, by the way, in Arizona and Phoenix, because they're entering one of their 10,000 plus cities, guys. So this news, in my opinion, is overblown, but feel free not to take the play if you don't like this one, guys. Right? everything that is possibly plaguing Uber is years down the line. So I do still think that there is a lot of opportunity here to benefit from a very cheap price on Uber. It's trading around a 1 PEG ratio, which is extremely cheap. Now, this one reminds me of a lot of stocks that have gotten trapped because of bad headlines and bad press, guys, right? Everybody wants to buy these things when they're up here, and then they only want a dip. But then when the dip actually happens, nobody wants to buy them. Why? Well, because usually on high quality companies such as Uber, a dip comes with FUD. Keep in mind, take a look at Google. Nobody wanted to buy Google down here. When I was pressing on the channel for it to be a very beautiful opportunity, nobody wanted to buy it down here. It had Department of Justice risk breaking up the company, and now everybody wants to buy the stock up here, right? Nobody wanted to buy Tesla all the way down here because the robo-taxi event was said to be a flop, and then look at Tesla now, right? Nobody wanted to buy Palantir down here. They said it was overvalued, and they said that Palantir's technology was not going to be included in the AI rally in the future. Here's Palantir now. Nobody wanted to buy Visa down here. Well, a few of you did. Nobody wanted to buy Visa. They were also getting investigated by the Department of Justice for their payment network, arguing that the company is a monopoly and that something must be done. The same thing was said about Apple all the way back here at $170, guys. You guys remember? Nobody wanted to touch Apple. Why? Well, take a look. You might remember this if you're a frequent viewer of the channel. They had all these issues. $2 billion EU lawsuit, Department of Justice lawsuit, 5 out of 6 quarter flat revenue growth, China slowdown in competition, Vision Pro's too expensive, lack of phone innovation, Warren Buffett is selling, and the AI is underwhelming, and then the rest is history, guys. Apple did what it does best every single time, is just leave the haters in absolute disbelief. So when you have high quality companies that are selling off, right? Everybody wants to buy these companies when they're at their highs, and everybody keeps saying, if it dips, I'm going to buy. But then when it actually does dip, nobody wants to buy because everybody somehow thinks it's going to zero, right? So once again, I've not really been wrong on any of these calls on the channel so far. I mean, past performance is not indicative of future results, but I do think there is an opportunity here talking about favorable risk to reward. I'm not saying that there's zero risk, but there is definitely more reward to this one than there is risk right now. Speaking of that, we're coming into a very nice area of support, 61 down to about 55, and you can see that is the previous all-time highs. Resistance going to be acting as support right now, and the 200 weekly EMA is just a fraction lower down there at 52. So I like playing Uber in this area. It's coming into the area very hot. It is daily oversold as well. All conditions that I look for when I'm looking to play one of my favorite stocks in the market. So that being said, the expected move is 57.56. Let us go shopping and see, can we find any short puts on Uber below that level and try to maybe pick up some shares when everybody else thinks that the company is somehow going to zero in the next 2 months. So moving on further, let's have a look. The expected move 57.56. We want to be below that level. So let's take a look at the Uber options right now. And as we can see, well, the 57s are paying 37 cents. That is above 0.5%. Keep in mind, you need to see roughly 28, 29 cents on the bid, and it is paying a little bit more. However, if Uber has even more declines on the Monday session, coming down into the 59, 58, 57, if the SPY, the QQQ keeps coming down, be patient with this one, right? We want to be getting as low as possible in this level. Think of maybe the 56, even the 55. So if Uber drops, it's going to be a few of these strikes for me. 56, 55, 54, depending on the size of the move down, guys. We're already daily oversold. It can only last for so long. If you get another 2-3% day on Monday, that will open up the 56, 55s, and 54s. We want to be going as low as possible while still getting 0.5%, which is roughly 26, 27 cents on the bid. So be dynamic with those strikes. Be patient with them, guys, and just let the stock come to you. That is stock number one. Moving into stock number two, we are going to take a look at NVIDIA. NVIDIA, obviously, everybody knows NVIDIA, one of my favorite companies in the market right now, and they just have not been performing too well. The entire semiconductor industry has roughly been flat. I mean, we can pull up SMH, right? The entire sector has been flat for roughly the last 6 months. This is one of the strongest players in the sector, and their earnings were absolutely fantastic. Demand through 2025 remains extremely strong. That being said, daily downtrend in motion for NVIDIA right now, and support below us, 130 down to about 125. A few people have said, well, this head and shoulders is going to send us lower, so perfect. If it sends us lower, guys, I will be buying down here, no problem at all. So the expected move for NVIDIA this week, big previous resistance should be newfound support for the stock, and we're also just looking for a little bit more of possible weekly consolidation into those levels. The expected move is 129, but if this week is possibly going to be as bad as I'm possibly looking to, not predict, but as I'm cautiously moving into the week, right? So the expected move is 129. I want to be getting lower than that. Let's go shopping on NVIDIA and see how low we can actually get on this options chain while still getting some decent premium. NVIDIA is right up here, so let's go have a look. So in terms of NVIDIA, here's your expected move, 129. So we want to be below the expected move, of course. Take a look, all the premium that NVIDIA is giving, even as low as the 126s. So we can be $3 whole below the expected move with Friday's price. It stands to argue if NVIDIA continues dropping Monday or Tuesday down into 133, 132, 131, that is going to free up even lower strikes, guys. Think the 124, 123, 122. I want to be getting as low as possible, even below this support box right here, which ends at 125. If I can get the low 120s on NVIDIA for this week, 123 to 120, that would be a pretty sweet location to pick up one of my favorite companies because it's entering the second line of defense, which is 120 down to 115. So because we have so many elements this week and because we know that S&P and the QQQs may be in consolidation mode, I want to be getting a little bit more conservative with my strikes. So for me, guys, it's going to be 120, let's call it 124 down to about 120. Depending on the size of the move down, we want to be going as low as possible on this chain to be sure that when we do pick up NVIDIA, if we do get a sign, it's going to be fairly close to daily oversold and could be getting a nice little bounce there. So that is trade number 2, but there is also, a host of other semiconductor plays that we can still play as well. onsemi is another company that I love playing. It is in a very wide range of support right now, roughly the last 2 years of support to be exact. So when we look at onsemi, I'm not going to give you guys the expected move for the week. You guys can now do it on your own since I've given you all the tools, but this area of support, guys, looking very good. If I get an opportunity on onsemi to write strike prices $60, $58, I would be looking for that one specifically. And even AMD, I opened a position on AMD just recently. You can see that right here. I opened the January 10th, 4 weeks away. So yes, you can play the strategy with more time, provided you're getting 0.5% per week. So this is a 4-week contract. I made sure to get at least 0.5% for every single one of those 4 weeks. I went with the 120s for $3 for January 10th, but we can play this on a weekly basis too. Just keep an eye on your expected move and go a little bit lower than the expected move coming down into this area of support, guys. You know the teens, right? 115, 117, 118, depending how low you want to go. If AMD keeps dropping on the Monday session down into the low 120s, it'll free up those strikes, guys. 115, 114, 113, even maybe. That could be a very decent opportunity for AMD. So there's a number of different plays in semiconductors, guys. LRCX as well, down into the support range. Whichever one that you guys prefer, just be a little bit cautious and a little bit conservative on your strike prices for this upcoming week. Now, company number 3 is going to be Coca-Cola. Figured I should throw in a little value name because tech has been a little bit overbought recently and could be seeing a pullback, but Coca-Cola is forming a nice base of support down here around the 62 down to about $60 range. I'll remind you, the setup for this one is a monthly breakout, retest of a whole bunch of previous resistance levels and support at the same time. Now they're using it as support. This could be a very decent area to possibly build a little bit of a position in Coca-Cola if it's a company that you truly like. That being said, the expected move for the week is $62.08. So let's go shopping on Coca-Cola and see, can we find any premium on it below that expected move of roughly 62. So Coca-Cola is one that does not have the most implied volatility, so you kind of need to be really close to the strike. As you can see, $62 not giving enough premium right now. You would need to see roughly 31 cents on the bid. I'll remind you how I'm doing it in my head, just half of the strike price in cent increments, right? So if you're looking for 62, you need to see at least 31 cents. 31 divided by 62 is the 0.5% rule. Funny how that works, right? So $62 is going to be the one that I'm looking at. So what needs to happen, guys, is we need to see a little bit of a dip on Coca-Cola. If it can dip Monday or Tuesday, it may free up a few strikes for us. Maybe the 62s, but if it has a really bad day, Monday or Tuesday, and you catch it, you might even be able to find the $61 puts. So for me, it's one of these 3 strikes, depending on the size of the moves, Monday and Tuesday, 62, 61, $60. Coca-Cola is forming a very nice base of support in this whole area down there. And I'll remind you, it is Coca-Cola at the end of the day. The analyst price targets for the next year are all massively above the share price, and the expectation for EPS and revenue should be growing fairly well. Just a little bit of needed consolidation after we blasted to a new all-time high. Now we get the consolidation before a possible next rally into 2025. So moving on to stocks number 4, I'll give you guys 2 that I gave you guys last week. Some of the cheaper ones, but still very solid companies. First one is going to be New Holdings. If you don't know this one, it is a fintech player from Latin America. Warren Buffett is also invested in this stock too. And what we're seeing recently, guys, is we've had a very big downswing on the weekly, and daily is kind of teetering towards oversold as well. That being said, there's a very nice area of support down here, 12 all the way down to roughly $11. Previous support in the past for the market, and it is the previous highs of the IPO cycle. That being said, I do like the 11s, but I'm going to be a little bit conservative on this one. The valuation is very attractive. Even at 13, we ran the valuation. Now it's a lot lower than that, but it was only about a 0.7, 0.6 peg. This company is growing phenomenally. Look at these net margins expanding into the 20% range. They're disrupting all of the legacy banks in Latin America. Very strong company. Look at this EPS growth. Look at the revenue growth as well. Warren Buffett definitely knows how to pick those stocks, doesn't he? So the expected move for the week is 1152 to the downside. We want to be going below that. So let's go shopping together on New Holdings and see, can we find anything below? And I'll show you guys what we have. So New Holdings, as you can see, for the 20th of December, there is nothing really at the $11 strike. You would need to see roughly 6 to 7 cents down there. So it stands to argue that we do need a little bit further follow through to the downside. If the stock has some downside Monday and Tuesday, I mean, 2 strikes will be open. The 1150s will be open, but look for the 11s. I want to be going conservative this week, letting the market do its thing. If it wants to fully flush on us this week, guys, and we'll be sitting down there waiting for the $11 strike on New Holdings. That is idea number 1. Idea number 2 for a cheaper stock is Chewy. Chewy, same concept. It's a company that's growing very well. The price to sales right now is around a 1, and the company is growing very, very well. They used to be net margin negative. Now the company is profitable, albeit slightly profitable, but they are growing very well. Analyst price targets largely remain above the stock price right now. Look at the EPS ramp for the next couple of years, and look at the revenue ramp as well for the next couple of years. They're a very solid company. We covered their earnings just a few short weeks ago on the channel, and I really loved what I saw. So for that reason, I will be looking Chewy to play this one. This is the classic breakout retest into support. Breakout of the previous resistance range, and now retesting this range as support. Keep in mind, this is a very solid area. It was resistance in the past, resistance, and a whole lot of support back here in 2022. So it is a very big level. That being said, the expected move is 30.73. So if we go shopping on Chewy to see if we can have anything below 30.73, you'll see that, as a matter of fact, there is not too bad for a premium down here. Even at the $30 strike, guys, there's 15 cents. That is literally exactly 0.5%. So for me, it's going to be one of those 2 strikes, $30 or 30.5 if we're a little bit more aggressive. But if Chewy has a red day, Monday and Tuesday, maybe with the rest of the market, we could possibly even see maybe the 29.50s or the 29s. You want to be going as low as possible in this region. So think 30 all the way down to 29, even 28.50 if we have a really bad day on the Monday session. That'll free up these lower strikes. It could be a very decent opportunity to bid on an extremely solid company that is growing well into the foreseeable future. That is stocks number 4. And now moving into the last one is going to be Airbnb. So Airbnb down 4.74% on the Friday session, and Airbnb could possibly be coming into the lower range. Now, it is not quite ready yet, but I figured I should give you guys this one all the same, because if the markets have a bad week, you might be able to pick this one up Monday or Tuesday if we do get that follow through to the downside. Keep in mind, Airbnb has been lagging its sector peers. Look at Booking Holdings all the way up here. Look at Marriott all the way up here. Look at Hilton. I'm giving you guys the most solid travel names. Hilton all the way up here, and one of the competitors of Airbnb, Expedia, all the way up here. What is not all the way up there? Airbnb. So if the entire travel sector consolidates, Airbnb has not even ran yet. It will consolidate too, and it could give us re-entry opportunities in the low to mid 120s. The expected move for the week is 127.03. Let us go shopping. I want lower than that, guys. I'll give it to you anyways, but I do want lower than that. I want like 125 and below, but you'll see right now, there's not much there. At 125, there's about 51 cents. You need to get at least 62 cents. So it's almost ready, but not quite. A few more days of red to the downside will definitely do it. If we see this one pull down Monday or Tuesday, 129, 128, 127, that will possibly free up even the lower strikes. 125 all the way down to about 120. I want to get as deep as possible, as close as possible to these guys down there, which is the true support level, talking about roughly 121, 120, right? So it needs to come down 4 or 5% this week as well for us to be able to get those 119, 120, 121 strikes. So I'm going to be waiting for these ones down here, guys, at a first glance, right? 123 even is not too bad. So for me, it's really these three, right? 123 down to 120, depending on the size of the move down. Don't get too greedy on it and play this one too close, because if the market comes down, you guys know what's going to happen. Airbnb is going to flush and start retesting some of these lower levels. I will be sitting there for some opportunities if it does happen. So those are the 5 trades of the week, guys. Hopefully you guys enjoyed those top 5 options. Now let's get into some bonus plays, right? And the reason that I haven't given any Mag 7 names, guys, I mean, a lot of the stocks are doing the same thing, right? It's tough. It's not that it's tough for me to find plays, but when I show you the plays, you'll see that not many of them are close to support levels. Airbnb, it's coming down, but it's not really ready yet. Charles Schwab, I'd love to play the banks, but the levels are all the way down here. It's just not quite ready yet, right? If you look at the cybersecurity companies, decent opportunities, but they're not quite ready yet, right? Here's Zscaler, Datadog, a little bit extended, right? We needed to pull back to open up the opportunity down here. Cloudflare as well, needed to pull back down into here to get some juicy opportunities. A lot of these stocks have ran a lot. Google is also no longer on my top 5 list because it's ran a ton. We needed to pull back to give us some opportunities down there. I can go through this entire list, guys, and everything is the same. Oracle, I mean, you can argue, but then again, it's not that strong of an area. It's ran a lot. I want to play it down there. CRM as well has run a ton. Needed to pull back, guys. The entire list is pretty much the same. And even if I filter by green names, right? AVGO, what I'm going to do? Chase it all the way up here? No thanks. Elf Beauty as well was on my top 5s the last few weeks. It's all the way up here. I want it down here. So for me, it's a no trade. TSMC, pulling away. I want it down here. No trade for me. I can go through this entire list. Tesla as well. Moving away. Not good enough. I want it down here, right? So I'm not going to be impatient and start chasing the market, because right now there seems to be a lack of plays, right? We want to find the plays that are still providing decent entry opportunities. And for a lot of these names on this entire list, guys, they're just too high, not really close to support levels. So we have to be patient, let the market come back into us, knowing full well that the SPY and the QQQ can consolidate this week. So here are the bonus plays, guys. I'll be going through these one after the other. Stock number 1 I'll be looking at is Enphase. Enphase, solar play. If you don't like solar plays, definitely do not play this one. It's not financial advice anyways. These are just some ideas. If Enphase has a pullback, I'll be looking to write some short puts down here. 64 down to about 63 location. Very juicy area. SMCI as well. SMCI has been somewhat out of favor, but I do like playing 28 down to 24. You can usually find some very good premiums on this one with a very wide margin of safety while still getting 0.5%. So I like that one too. SOXL. SOXL as well. This one has ran a lot, but I want to be playing it down here. We did play it a few times in the Discord last week. As you can see, SOXL and SMCI, but I was very far away from the level that I played. If we have a dip in semiconductors again this week, it could free up the 27 down to 25. That is where I want to be playing SOXL. Why? Because it is very large weekly support, guys. Look for the large weekly support levels. MSTR. There is a way to play MSTR. I mean, you can play it super aggressive if you want, but if you guys want to see how I play it very conservative. I have an MSTR for next week. I went with the 295s and I got $2.24 for it. Above, it's about 0.75% for the week, right? Very far away. MSTR is 408 right now. I'm all the way down here at 295, 28% away, and I'm still getting my premium minimums. So if you're very aggressive, by all means, if you want to take your chances and play it up here, that is all up to you. But there's a safe way of playing this down here while still getting some very juicy premium. Same for BITX, right? For the Bitcoin plays, depending on what tool you want, Coinbase, Robinhood as well, right? there's a way to play them in a safe manner, targeting larger areas of support. That being said, another one that I'm looking at curiously is BABA. If BABA for some reason flushes with the rest of the China trade back into the low 80s, could open up a very juicy level, guys. We've seen this one many times in the past, talking about 82 down to about 75. Decent little pocket to pick up some shares of Alibaba if you like that style of company. Then there's the banks, right? Charles Schwab pulling back down here, 74, 75 level. This one's on my watch list for the next 2 weeks of trade. JP Morgan as well needs a pullback, guys. They've ran a lot, need a pullback. I'd be targeting these areas down here. They're not quite ready yet. Bank of America, same concept, has pulled far away. Why would I be chasing it up here? Give me the pullback into previous resistance, which is now support, and I might nibble a little bit down there. The same thing for the credit card companies. They've ran a ton. Need to see a pullback into a large area of support for me to be interested in something like a Visa or even American Express, guys. They've ran an absolute ton. We are nowhere near support, so I'm not going to be chasing them. I want to see some of my pullbacks to open up these deals. So those are those ones. And the Mag 7 names as well, guys. Google has ran a lot. If it does pull back here, I'll be looking for the mid to low 180s for the pullback into this range. Microsoft, same concept. We've pulled very far away from the recent area that we broke out of. Breakout retest. I'll be targeting here if Microsoft interests me to be writing some short puts. Apple, same concept. We ran a ton. Why am I going to be writing puts all the way up here, trailing it super close, right? No, I would rather wait for a weekly pullback in. This is a weekly breakout retest. 235 down to about 230. If it comes back down there, I'll be interested. You can see the concept, right? None of these plays are truly ready just yet. They're on the verge of being ready, but we have to be patient. Amazon, same concept. It's ran an absolute ton. Why would I be chasing it super close? I'd rather wait if we have broad market consolidation, pull back into roughly the 200, 215 level. Maybe I can go shopping for a little bit of Amazon down there, using short puts as a proxy for those buy opportunities. So you guys get the drill, right? Even an index like IWM Russell, you want some small cap exposure, decent time to be playing the Russell, right? Coming down into the previous area. This is a breakout retest, right? Coming back down to the previous resistance of 2020 and 2021, now going to be acting as support. So there is a ton of opportunities in the market right now, provided you are patient. But I mean, there's some companies that I love. I love Shopify, but what am I going to do? Play short puts all the way up here when we're nowhere close to support? No, guys, I'm not going to chase these ones, right? I'm just not going to do it. And then there's other companies that are just trapped in perpetual weekly and monthly downtrends like CLH. I'm not going to be playing CLH down here until I get a confirmed weekly uptrend, and recapture of a big level shows me bulls are back in control, right? So there's ways of playing these. We have to be patient. And I'm definitely not going to be playing oil because the whole sector is out of favor right now. Healthcare as well. So I'm not going to be playing sectors that are out of favor either. I want to play some banks, but I need a pullback. I want to play some technology stocks, but I need a pullback. I want to play SoFi and I want to play Palantir, but I need a pullback on SoFi. 14, I can write perfect. The 14s, the 13s, I'll go shopping right there. Palantir, what am I going to do, guys? Chase Palantir when it's all the way up here? No, I want a weekly period of consolidation, maybe back down into the mid 60s, and then it'll free up some strikes all the way down here in the low 60s. That might be wishful thinking, some of you can argue, but that's just the way I trade, guys. I'm not looking to chase these ones with some short puts. If we're looking to chase the hype and the momentum plays right now, short puts is not the way. The wheel is a more of a defensive strategy. It's not meant to play offense, guys. If we're trying to play offense on these names, it is either call debit spreads or just straight call options with a lot of time, right? Not going to be looking to chase these markets with aggressive short puts, just looking to trail. It is not the right tool for what you're looking to do. If you're looking to play the expansion on Palantir, it has to either be just small share position size or possibly even some call options as well, right? I'm not going to be looking to do the wheel strategy, chasing this one super close. And then if it burns me, then you're underwater a ton and you wonder why you chase the market with a lot of capital, right? Because 100 shares is a lot of capital. So I'm not opposed to playing the hype and momentum plays, but there's a way to play them on some weekly pullbacks, which we might just be getting in the next week of trade. So that is everything for the bonus section of the plays, guys. Hopefully that logic has been insightful for you guys. And if you enjoyed the video, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. We do these videos every Sunday in preparation for the upcoming week. This one was a little bit longer because I wanted to give a fair warning for the week. This week could be perfectly fine and we can just move up in the markets, right? But if we move down, I want to prepare you guys for what we can possibly expect and give you guys the tools and the strategy required to best play those dip opportunities. And then lastly, guys, if you have any questions on the strategy, now's the time. Leave them down below in the comment section and I will answer them usually within the first 24 hours. And in the event that you guys want access to all of these trades in real time, not only the wheel trades, but also the directional trades, because I don't only write put options, of course, guys, I do a ton of calls, both short duration calls and leap calls and share plays, call debit spreads, all types of different options. Here are all the trades from the inception of the Discord. The green check marks are the wins. These small little red boxes are the little reds. As you can see, the wins, it's kind of, I'll just let you guys see, right? I'm very transparent with my wins and my losses. Past performance is not indicative of future results. Of course, these are assignments, most of which we always usually get out of profit. So past performance is not indicative of future results. I can't guarantee performance, of course, but I run this strategy very consistently. I've shown you my gains this year and from 2023 as a whole since starting the YouTube channel, and they've been fairly good. So if that interests you, the link to the Discord is down below in the description. We also do private morning live streams every Monday through Friday for about an hour or two. You can chat with me all day as well, ask me questions on your stocks, your options, and everything in between, and I usually answer very, very quickly. All the trade setups, whether they're calls, short puts, and stuff like that. And we also do some private member videos, which I don't show on YouTube. A lot more strategies for debit spreads, call options, more in depth of the wheel, stuff like that, right? So if that's something that interests you, the link is always down below. Hope to see you in there soon. And if not, well, I guess I'll see you back on the channel, guys. That's it for me. Have a good week of trading, but be a little bit cautious. It's okay to be optimistic. I as well, I'm optimistic. I am a bull in this market, but there's some times that we have to be a little bit cautious with our optimism. And this week could be one of those moments. So be very careful, guys. Hopefully you guys have a good week. Talk to you soon and peace.